It is on the hour. Let's make a start. For those of you who are brand new, these sessions are exactly 60 minutes. We'll finish on the hour. And a couple of things before we get started. If you've got any questions, please ask your questions. If you have a question, then just because you'll see sometimes there's comments come thick and fast, so that I don't miss your question, put 2 capital Q's in front, QQ, and then your question. It helps it to sort of jump out at me so I can ask the question. It should be a bit easier today because I have a guest, which means I can spend more time checking the comments box. So if you forget the QQ, it's not the end of the world, but it just helps a little bit. We do have David is here again. Oh, that's Charlotte. I clicked the wrong button. So Charlotte from the UK is here on Facebook right now, and so is David Bennett. And Sarah has just put in. That's not me, that's Sarah. Let me click on this one. That's what a QQ looks like in case you're not sure. If you're new, ask your questions in that format. It just helps me see the questions. One last thing that I wanted to mention is that one of the things we always do to help make the world a better place is for everybody who shows up live to one of these sessions, that's you, we make a contribution to a project somewhere in the world, a worthy cause through the amazing B1G1 organization. And for this week, that was yesterday's session and today's session, we are making, for each and every one of you, we'll be making a contribution to a wonderful cause over in Honduras where they're not as well off as us, and they have health issues from cooking indoors. They don't have proper stoves, very often open fires. And so for each and every one of you, we'll be providing a day's access to a clean cook stove. And if you want to know, we do a lot of stuff with B1G1. As I say, every single live session we make a contribution. And if you're ever interested in finding out what that kind of looks like, if you ever go to our website, which is www.wickersham.co.uk, and why is that not showing the right thing right now? I can't show it at the moment. I had got it set up, but it's not. But if you do go to our that's because I pressed the wrong button. That's why. If you go to our website and you scroll down to the bottom of our website, you can see all the impacts that we've made, the contributions for when people like you show up to our live sessions, and we're getting close to 250,000 impacts, contributions to worthy causes around the world. So thank you so much for being here live, because it helps make the world a better place. What we do is at the end of this session, we get a report on the number of people live across all the different platforms, and then Sarah will go away and make the contribution to that particular project over in Honduras. Okay, I think I'll do one last shout out from somebody who's just commented, which is Danilo from again, another person from Florida, and I have been to Orlando. So welcome to you, Danilo. Right, I am going to stop waffling and let's get down to business. Let's get down to talking about forecasting, and I'm going to bring on my special guest. His name's Jim Raina. I've known, let's bring him on first. Hi there, Jim.
Hello, Mark.
Great to see you. So, Jim, we've known each other a long time now. The first time we met was November 1998 in Exeter, when we were both running our accounting firms and attended the 3-day masterclass with Steve Pipe. That's right, isn't it? I'm not going.
That is right. Yeah, I didn't know it was 98, but yeah, it was certainly around that time, and it was certainly November.
Yeah. Yep. I remember it was 98 because for me that was a life-changing 3-day event, because I was a traditional accounting firm doing compliance work only, and compliance and tax planning work. And it was in those 3 days when we first met Steve Pipe that really opened my eyes up to the fact that we can do so much more for our clients, that we can help them, advise them on how to build more successful, more profitable businesses. And I know, Jim, that's something in particular, that's an avenue you went down a lot more and do a lot. You do, I think I'm right in saying, just correct me, I think you do pure advisory work now. Is that correct?
Yes, that's right. I haven't done compliance work for quite some time. So the sort of first half of my career was in practice. And at the time when we first met on Steve Pipe's masterclass, I'd sort of recently started my own practice. I'd previously been a partner in a firm of accountants, recently started my own practice. And I carried on doing that for a few years after that. Um, I think I probably wasn't as good at you as learning some of the lessons that Steve taught us. And I got to the stage actually where I made myself ill from overwork, and decided to move away from practice. I worked as financial controller in a law firm for a few years, and a similar role after that in an advertising company. And then I've sort of moved back into sort of professional life, and now I exclusively do business consultancy work and a bit of training of accountants in how to use and communicate numbers.
Yes, because one of the things that you are extraordinary at is, and I think it's your background in statistics and so on, you have a real deep understanding of Excel and a deep understanding of how to present financial data so that it's more meaningful and useful to clients. And I know that towards the end of today, we'll talk a
Yep.
bit more about how you help accountants to understand the numbers better and present those numbers. So,
Yeah. One of the things I'm sort of really keen on is how we as specialists who are used to using numbers, how we can communicate the story behind the numbers to people owning, running businesses who are perhaps not natural numbers people. They may be great marketeers or entrepreneurs or managers, but numbers are maybe something that scare them or something they're not particularly comfortable with. And we need to be good at bridging that gap and helping them to understand the numbers and make appropriate decisions on the basis of the numbers, on the basis of the evidence.
yeah, absolutely. And before we dive into forecasting, which is what we're really focusing on
Yeah,
today, and I'm fascinated to, I'm really looking forward to hearing your insights on forecasting. Before we dive into that, just for everybody, if advisory is your thing and you want to get better at helping clients build more profitable businesses, etc., then just so you know that we are running a 3-day online conference in October, and it's all about both value pricing and creating value. And day 3 is a lot about creating is helping clients with advisory work. So if you haven't yet got your tickets yet, then Sarah's going to put a link in the comments wherever you are in YouTube, wherever you are on Facebook, LinkedIn. She'll put a link to how you can get a free complimentary ticket to our conference. It's called Value 2022. Because that's this year, and I pressed the wrong button again. It was that button I was supposed to press. The website looks like this. Go here, click on the link, go to this page. You can scroll through and read more about it. And if you click on that big yellow button in the top right that says get your free tickets, then you can come and spend 3 days with me online in October learning about how to value price, but also how to create value for your clients through advisory work. Okay, with that done, and I can see that Sarah's been putting the links in the comments box now, so you've got that link to Value 2022 and your free tickets. Okay, Jim, my first question for you then is about the title for this session. You wanted to call it Predicting is Impossible, but Forecasting is Essential. And it's kind of a bit of a cryptic, confusing. I thought, that's interesting. What does all that mean? So Jim, explain what you mean by that.
Okay, yeah. I think we've just been through a period of sort of unprecedented uncertainty and sort of quite dramatic changes in business life. So the reaction to the pandemic varied a bit between different countries. I know in the UK, I think in Australia and New Zealand as well, there were quite restrictive changes made to businesses. My particular niche is hospitality industry, and lots of our restaurants, pubs, bars were closed for a prolonged period of time. And then when they were allowed to reopen, there were big restrictions on what they could do, to do with sort of spacing tables and serving people outside and all that kind of stuff. So I think when the pandemic first struck, and we had started to get these restrictions, and we got, consumers were in some cases quite frightened about interacting with other people. When that first happened, I think a lot of people said, we can't predict what the future holds. We can't tell how this pandemic is going to unfold, how governments are going to react, how our customers are going to react. We can't predict anything. There is no point trying to do forecasts. If we do them, they'll be immediately out of date, and there's too much uncertainty about. I think that's wrong, and it doesn't just apply to what's happened in the past, because we've having come out of the pandemic, we now seem to be in a situation, I think, in most countries in the Western world, where we got inflation starting to kick off again. I mean, in the UK, food inflation is running at about 10%. We've got much higher inflation on gas and electricity utilities. We've got a loss of consumer confidence, and there's quite a lot of uncertainty about. So there's a sort of feeling that because of the uncertainty, we can't do forecasting. I think we need to draw a distinction between predictions and forecasting. So a prediction might be something like, there's a 60% chance it's going to rain today. Somebody might predict who's going to win the Champions League this year. We might predict what Saturday's lottery numbers are going to be. And typically those would be sort of pronouncements from experts who've looked at the situation, and they've come up with their prediction, which they think is the most likely thing to happen. And there's a huge amount of uncertainty in that. If it's the lottery numbers, there's enormous uncertainty about it. And it's not particularly helpful for somebody trying to run a business if they're told that there's a 50% chance that inflation next year will reach 20%. That on its own is not particularly helpful, and we can't be particularly accurate about those kinds of predictions. I think forecasting is something fundamentally different. When we're doing forecasts for our business clients, what we should be trying to do is build the forecasts on the basis of some assumptions. Those assumptions, there may be uncertainty built into them. So the kind of things that I'm talking about here are, one of our assumptions might be that inflation is going to be, say, 10% for the next 12 months. We might have assumptions about circumstances from outside, such as what inflation is going to be. We might have assumptions of what actions the business takes to deal with changing circumstances. But basically, what we're doing is we're formulating assumptions on which to build our forecasts of typically profit, cash, balance sheet figures. And we're framing the assumptions in terms that the client understands, that in terms that make sense for that particular business. So our clients can then look at the assumptions, see whether they assess whether they are accurate for their circumstances, and then know that the forecasts that we've built on top of those are giving them a realistic indication of what's likely to happen. So the key point about the assumptions is that they're things that the business owner understands and they can assess. So I think what we're trying to do with forecasting is we're not trying to predict the future. I think that is impossible, and probably even more impossible now than it has been for quite some time. What we're trying to do is prepare our business clients so they can face whatever the future may throw at them. Does that make sense, Mark?
That makes absolute sense. And one of the things about assumptions and forecasting is you can create different scenarios and sit down with the client and say, this is what your business might look like if inflation continues at 10%, but this is what might happen if it goes to 5%. I think that's what's powerful about forecasts, particularly when we look at different scenarios. And we might get into that later, perhaps. I remember, of course, as perhaps we all do, when the pandemic started, and back in March, and probably like everybody else, I felt there was a lot of uncertainty in the world. It was a bit scary.
Mm.
Things were changing very fast, and I had no idea what the future would hold. But I think that during the pandemic or in any uncertain times, and we have uncertain times now with wars in Europe and inflation, I think that the more uncertain times are, the more value that we can create as a profession. And forecasting is one great way of creating value. So on that note, Jim, if we're talking think about forecasting and creating forecasts for clients, what would you say goes into a forecast? And perhaps more important, I'd like to get your thoughts on why is a forecast valuable to clients? Because I know that a lot of accounting firms, accountants, bookkeepers, struggle with understanding the value of forecasting. And if we don't understand the value to the client, it makes it hard to price it and get a value-based price, a good price. So let's talk about value and the value of forecasts.
Okay. Well, first of all, what typically goes into a forecast? I mean, if you're doing a full forecast, you'd normally do what's called a three-way forecast. So you'd forecast the profit, the cash flow, and the balance sheet. And typically you would do it at month by month breaks, maybe over 12 months, maybe you'd look further forward, sort of 3 years, something like that. Um, we can also do sort of cut down versions as well. So we could do short-term forecasts. I mean, typically, when I've been working as a financial controller, you might well do you might well have a running daily forecast of the cash position, so that you can so a very short term one, and you probably wouldn't do a balance sheet or a profit forecast day by day, but you might forecast the cash day by day, just so that the business doesn't get nasty surprises and you get to the end of the month and realize you can't pay the salaries or something horrific like that. We can do what I'd call a summary forecast. And so instead of doing month by month, you might do it year by year. And that's quite useful for doing a preliminary look at something the client's considering doing. So if they're thinking about maybe putting up their prices, I mean, let's say that sort of typical scenario, they think they want to put up their prices. They think they'll put them up by 10% and reckon they'll lose 5% of their customers. And you can do basically a summary forecast of what that does over the course of a full year. And you can do that very quickly. There's tools that sort of you and I have developed that allow you to do that. And then once the client has got an idea of what they think they'll go with, at that point you could move over and do a full three-way forecast. Because one of the issues is very often something will be profitable but not immediately cash positive. So you might want to break it down month by month, so you can see that you've not sort of hit on a project which is profitable in the long term, but in the short term it's going to cost you huge amounts of, you've got large amounts of cash going out and causing you problems. So the sort of three types of forecast could be a short term one, maybe just covering weeks. And then you've got a sort of summary, which would be typically for a whole year. And then you've got the detailed month by month one. In the past, probably because it was quite time consuming to do a forecast. I mean, I remember when I did my first one, which was way back in 1982, I went to a hotel in Harrogate and spent a week armed with a lot of double analysis paper, a calculator, and a pencil, and a lot of Tipex. And it took me a week to do a full three-way forecast for this hotel. you can now do it much more quickly. So I think in the past we tended to do forecasts really if somebody insisted on them. So typically that would be outside investors or lenders, the bank manager, that kind of thing. And obviously there's value in that because the bank manager wants it. One of the other useful things for forecasting is for really just putting numbers into the business plan. The the business owner has decided what they want to do. They've got a strategy, they've got a plan, and you need to put numbers in it to make sure that it does that what looks viable actually is viable, and you can see at the end of each month, what the cash flow is going to be, and whether it works. Another useful thing is so that you've got some forecasts to provide a yardstick with which to compare your actual performance. So if your forecast is showing where you're going to be after 3 months, and your actual results are rather different to that, you can then start asking questions, sort of why aren't we where we thought we would be? And it may be that the forecast was unrealistic, or it may be that we've got underlying problems with the business that we need to be looking at. But I think the most important one, particularly at the moment, is where the greatest value to our clients is helping them to explore the effect of different external factors, so inflation, government help, customer confidence, that kind of thing, and also to explore the effect of different business decisions that they might make, in reaction to that. So, sort of things like, we know that there's in my particular interest, restaurants. We know we've got food inflation running at about 10%, and we've got huge increases in utilities. What do we, if the business decides it's going to put up its prices by a certain percentage, what does it need to do in order to break even? And you can model those things, produce forecasts, and help the business make better decisions.
Yeah, and on this subject of why they're valuable to clients, I see the value fully because in my last business, and you'll probably shout at me, Jim, because in my current business I don't do forecasts at all. But that's only because I have a business where it's 100% recurring revenue. Our fixed cost base is so low. I think our net profit margin is about 80 odd percent, close to 90%. So it kind of doesn't really matter so much in my current business. But my previous business, which I know some people watching know that, when I worked with Steve Pipe, at one point we had over 30 employees in the business. And so our fixed costs were really high. We had big payroll at the end of every single month. And it was really important when you've got high fixed costs, which a lot of business owners will have that. It's really important to know whether your expectations over the next few months are going to generate sales and cash flow is going to enable you to meet payroll, for example. And for us in our previous business, we did the forecast and updated it every single month, because for us, it told us when there might be possibilities of not being able to meet the payroll, for example, which would then allow us to make some decisions on what we might need to change, if that thing was to arise, if our predictions were right, if our forecasts were right, what should we change in the business? And so it'll be interesting to get your thoughts, Jim, on once we've created a forecast for a client, once we've got that forecast and it's been built, how do you see, what are the different ways that a forecast will help a client to make better decisions?
Yeah. I suppose what we're trying to do is we're trying to give the business owners, business managers, the ability to prepare for the future, so that things don't take them by surprise. So we know, we can see where we're going. We've got something to we've got a yardstick to measure things against, and we can model changes. It could be unexpected changes like like a pandemic. They could be gradual changes like inflation, and really what we're helping our clients do is answer the big what if questions. What if this happens, and what if we do that? Um, Let me give you an example. Um, Client said to me probably about 18 months ago, I'm thinking of employing a salesperson. We've got the opportunity to expand into a new market. I've got a salesperson in mind. They want, I can't remember what the salary was, but it was going to be a package of a basic salary plus sales commission. And we've got, they reckon they can produce so much in sales. Our gross profit will be the same as it is at the moment. And the client had really got three questions. First of all, is it worth doing? Secondly, how much leeway have we got if the salesperson doesn't produce the income that we think they're going to? And then sort of finally, how what's the sensitivity? So, um, uh, but so how sensitive is the profit to the level of sales that they make? And then the supplementary questions, of course, were okay. That looks great, but what if we change the salary package slightly? How does that all work out? So what we did was a summary forecast rather than a detailed one to start with, and really it's about giving the client the ammunition to make a better decision. So what we don't want to do, I think, is and what we might have done in the past. Somebody asks us this question, and we might do two things. We might do the whole thing on the back of an envelope and just give them the answer and say, okay, this is what you need to do, which I don't think is particularly helpful. May make us look clever. The other thing we might have done is thought, okay, this is an opportunity this is valuable. This is an opportunity to charge the client money. What I will do is I will go away and write a 3-page report, and it'll be full of caveats and goodness knows what. And that's not what the client wants either. What we really need to do is to give the client the opportunity to see the numbers, maybe experiment with them, try out different alternatives, and make the decision for themselves based on assumptions that they understand. So assumptions about how much we're going to pay the guy, what commission they're going to get, what money they might bring in, and I mean, later on we had other assumptions about how quickly people were going to pay and how quickly the sales were going to build up. So I think doing it that way helps the client make a better decision. It's not just on their gut feel and a hunch that this is something worth going with, but actually it's evidence based, and I think that's that enables them to make a better and a faster decision. So in that case, we did a summary forecast, and then we broke it down month by month so that we could see how the cash flow panned out over a period of time. Sensitivity is quite an important issue. So what we mean by sensitivity is how sensitive are the results to changes in the assumptions. So if one of our assumptions is we're going to pay the guy, I don't know, basic at $24,000 and give him 5% sales commission or something. If we tweak those, Does it make a dramatic difference to the bottom line profit and the cash flow, or is it fairly marginal? Is it sensitive, or is it not? So really, I think it's about giving the client the tools to make an evidence based decision. And I mean, that was one example where I had a client who had one particular idea in mind. You sometimes get situations where um, business owners have got sort of 3 or 4 different projects that they're thinking of doing, and the question is, which one? We can't concentrate. We can't cope with doing all 4. We want to concentrate on one, maybe two projects. Which are the ones we should do? So which is the most profitable? Which gives the quickest return? That kind of thing. Does that make sense?
Absolutely. Yeah, yeah. So we've talked so far, Jim. I'm just conscious of the time. We're halfway through, and I've also just noticed out of the corner of my eye, I have a question from Brian Wright,
Oh,
the first question. So we will get to that, Brian, soon. But what I'd like to just talk a little bit about next, we've so far talked a lot about what's the value of a forecast and how does that help clients make better decisions. But let's now get into a bit more of the meat, which is, so how do we go about building a forecast? How do we build a forecast that reflects how the business works? What are your thoughts on that?
okay. Yeah, I mean, first of all, it is important that it does reflect how the business works, and that's otherwise we're just playing with numbers, and
Which is fun.
um, well, to a point, yeah, um, yeah, it is quite fun, yeah. Um, so I think the starting point is invariably starting with sales. And you want to try and break the sales down into the things that drive them. So you might have different streams of sale revenue streams. So if it's a bicycle shop, you may have sales of bikes, repairs, and you might be teaching cycle riding or something. Um, and they're different streams. So you've got one-off sales, you've got regular maintenance work. You may have different groups of customers, um, and you might have business to business customers, and maybe business to consumer, people who buy online, people who come into a shop, and you'd want to look at those separately and then break them down into what drives them. So, I mean, typically that might well be how many. I mean, if you take a restaurant. Um, First of all, with a restaurant, you've got an overriding constraint, which is the number of tables you've got and the number of people you can physically serve meals to. Um, so you look at sort of occupancy levels, how many customers you serve, their average spend, and that would be different depending on what time of the day they're coming in, and the number of times if they're regular customers, the number of times they come back within a year. So you want to break it all down, and that typically means using drivers which are not actually financial figures. So they might be the number of covers, the number of people you can actually serve in your restaurant, uh, number of times how frequently they come, once a month um, or once a week. Uh, and those are likely to be the kind of figures that the client will either have or understand, or can take a view on whether or not they're realistic. So you want to build the sales forecast up from that. One of the real dangers actually is, I mean, there is a school of thought which says the client should do the sales forecast, and then the accountant does all the other stuff. I think that is a big mistake. I think we need to work very closely with our clients when doing sales forecasts. The real danger, and it's happened to me a few times, is you ask the client to prepare a sales forecast, and what you get is not particularly helpful. the sales manager comes back to you, and all he's done is he's taken last year's figures and added 5% on, and that doesn't give you. You need at the very least to have the sales broken down um, into volume and average selling price, because if you don't know the volume, you can't work out what the cost of sales is, because the sales may have gone up because prices have gone up, but that doesn't affect the cost of sales. Or it may have, the forecast sales may be higher because they reckon they're going to sell more this year, in which case the cost of sales does go up. So I would want to work very closely with the client, to get a handle on the sales forecast. Once we've done that, we can then move onto the cost of sales. We've got assumptions about whether the cost of materials is higher than it was last year, and we need to specify what those assumptions are. Then we can do the overheads, and then we can start looking at the things that drive cash flow in the balance sheet figures. So we're looking at inventory days, accounts receivable days, and then finally moving on to loans, capital expenditure, dividends. And we want to document all the assumptions as we go through, because we're likely to want to, well, first of all, with the assumptions, we want the client to be able to take a view on them, and we're probably going to want to make changes to them. So those are the steps that I would want to go through. In practice, I would use software to do it, and maybe we'll come onto software
Sure.
software in a moment. But
Yep.
I think those are the steps. You start with the sales, and that really is the critical one. And then once you've got that, you can go on to the cost of sales, and then inventory days, accounts receivable days, loans, capital, dividends, that kind of thing. And then we can pull the whole thing together, and
Sure.
get a profit forecast, cash forecast, and balance sheet.
Sure, yeah. I think that as accountants, I think the value that some of the value that we bring, and this was my experience of doing forecasts for clients, a lot of the value that we bring is, I think, the sanity checking, because
Mm.
my experience is that clients, business owners are usually wildly optimistic about things like where sales might go, and also underestimate impacts on costs. And I think where we bring some real value is then saying, well, hang on a second, and like you said, you don't have enough tables in your restaurants to hit those targets,
Mm.
or other impacts of things like inflation that people don't think about on their costs. Or another one that people always forget about is, and you talked about the three-way forecast and the importance of that, because very often people they've got this forecast to grow, but if they've got accounts receivable days or debtor days of 30, 60, 90 days, then growth can actually have a huge impact on working capital and lead to
Yeah.
huge cash flow shortages. And these are things that clients don't understand because they don't understand the
Yeah.
numbers. We
I
do.
think if you, I mean, I mentioned that the number of tables in a restaurant. I think if you look at practically every business, there are constraints, on size. I guess for your business, there's no great constraint, because there's not much of an upper limit to apart from the world population of accountants. There's not a huge. It doesn't make it much more difficult for you to talk to 100 people or 500 people, but for most businesses, there are constraints on the size the business can get. So for a restaurant, if you've only got 12 tables, you can't serve 500 meals. I've worked with businesses where most of I work with a business who make bespoke furniture, and there's two people involved. One of them does most of the joinery work. The constraint there really is how much work can he physically do. By buying more machinery, he can do it quicker and get through more work. But there is there's a limit on what's physically possible. We may have limits on how much, if you're a manufacturing business, how much can be put through the put through the machinery. And a good starting point when looking at the sales is to ask what constraints are there on the business, and then sort of work out the sales as a realistic percentage of what's physically possible.
That's a
Yeah.
great point. So if I was building my system for doing forecasting, that was one of the questions that would be on the system. What are the constraints for this particular business? We have a few questions come in, Jim, and
Yeah.
I mean, I have a couple of questions still as well, things we'd like to talk about. And I think particularly because this is what you do. You're a real expert in this. I think hearing your examples are really insightful. So if you've got more examples, practical examples, that would be great. But let's
Yeah,
turn
I do
to
have one. Yeah.
one or two questions. We have a question from Brian Wright in the UK. And it might be one that I can help with as well, perhaps, but I'll let you go first, Jim. He says, how can I persuade a client who has expanded recently to pay for a forecast which I believe they desperately need? And I think that's a common question people have, is how do I communicate the value? How do I get the client to say, yes, they need a forecast? What are your thoughts on that?
Yeah. I guess I want to know why you think they desperately need it. I mean, I think most clients do actually. They may not know it, but I mean, if there's a particular reason why you think they need it, then I think I would I would talk about what can what could go wrong if we don't do the forecasting, and what they will get out of it. And one of the things they get out of it is actually peace of mind, knowing that that somebody's looked at it and given them the ability to see what's going on, to see what might happen, and really you're giving the client the ability to get back in the driving seat, so that they are controlling the direction of their business, and they're not just reacting to events as they unfold. Does that help?
Yeah, I agree with that. I mean, my thoughts were kind of along the same lines, Brian, that the first thing I'd be thinking about is, okay, so what is the value of a forecast? And we've touched on that a little bit in this session, and it's about making sure that you communicate the value. What's the benefits? What's it going to do for them? Like the peace of mind, for example. So talk about the benefits, but also talk about the pain, the problems. What's the pain? What's the problem if they don't do the forecast? And one of the things that I think is really useful is if you've got case studies, stories of clients that either have never forecasted and then gone out of business with unexpected surprises. They had no idea they're going to have a cash crisis, couldn't meet the payroll at the end of the month. They had to close the doors. We've probably all met a business owner that's had to close the doors because of unexpected problems. So use those stories, tell the stories to highlight, to illustrate what can go wrong if you don't have your finger on the pulse of what may happen. You don't know what's may well happen in the future of the business. So there's where I would focus on what's the pain of not taking action, and use some stories, and what are the benefits, what are the outcomes, and then one of the things you want to do is start to systemize that process. So those of you watching who are in the Value Pricing Academy will know I teach how to price forecasting work. And I haven't got it in front of me here, but I do have something else here. One of the things I do is talk about the importance of having professionally designed brochures, which act as your script, your aid memoir, your agenda of what to say. So you say the right words. Because I think the big thing, Brian, is when it comes to, I think you said using your language, persuading a client to say yes and buying a forecast. It's about communication. It's all about communicating value and the words that you use. So, Brian, I hope that helps. I'm sure lots of other people wish they'd answered that question as well. So thank you for asking it. I know it's on minds of many people. Let's move on to another question. Then I'm going to ask you, Jim, for if you've got any other examples, and I think we'll touch on software as well, because you said earlier, I remember you said earlier when you did your first forecast, I think it was 1982, if I remember right, if I was listening. It
Mm.
took you a full week with a pen and paper
Mm.
and so on. I can imagine that. When I started my accounting firm, I think it was Excel spreadsheets, which took an age to build. And at that time in the UK, I think there's one piece of software which was called Wind Forecast, which I eventually bought in my accounting firm, and that was brilliant.
Yeah, I remember it well. Mm.
I think, yeah, you'll remember it. I use Wind Forecast a lot. It was a great tool. It was far better than
It was.
my Excel spreadsheets, which I'm not as good with Excel as you are, Jim. Anyway,
Wind
let's get on to
forecast
software.
Wind forecast is still alive in a different in a different guise.
Sage bought it, didn't they, in the
Yeah, and
1990s, early 2000s?
Sage then sold it, and it's now been incorporated into actually my favourite forecasting software, which is an Australian product called Castaway Forecasting,
Yep.
and that really is built on the foundations of Wind Forecast.
I didn't know that. I have seen
Mm.
Castaway and it looks great.
Mm.
I didn't know it was built on the foundations of Wind Forecast.
Mm.
That's interesting. I've learned something today. Thank you for that. Jake asked a question. Let's deal with Jake's question if we can. I haven't read it yet, so let's see. Jake says, "How would you approach realtors in the UK, estate agents, to present the value of doing a forecasting?" So I guess it's another value-based one. They are usually sole practitioners who are horrible at business planning. They're salespeople first and foremost. So, any particular thoughts on this? I know it's a similar question to the last one, but specifically for realtors, any thoughts?
I don't know. Uh, it's a long, long time since I acted for a estate agent. Uh, I mean, the ones I've acted for in the past have had, I suppose, two sort of streams of income. One is commission on sales, and the other was more sort of regular income for managing lettings. Um, the I mean, depending on how big it is, uh, sometimes with a small, if they're quite a small business, the income can be quite sort of lumpy. So you get, you're you're not selling very many houses or properties, so you might have a really good month um, followed by some rather leaner months. So
Hmm.
I think what I would want to do is um, probably probably talk to them about using forecasting to help them deal with the uh, preparing for the lean months, and uh, uh,
Yeah, because
not getting too
it's a
carried
fairly
away when they have
season.
a really good month.
It's a seasonal business in the UK. A lot of house
Mm.
sales take place in the spring is when people generally move. Jake, I'm conscious that so Jim's never acted for realtors or estate agents, and when I was in practice, I never did either. I never acted for an estate agent or realtor. So what I'm going to suggest, Jake, is if you copy and paste or put that question into my Facebook group, Value Pricing with Mark Wickersham, ask the question there. There's a 9,000 odd accountants, bookkeepers there. Somebody else is likely to deal with realtors and have some thoughts on that. And after this session tomorrow, when I've got my mind's fresh again, I may come up with some ideas for you. But as I say, I've never actually worked for estate agents. So I can see an interesting comment from Beverly on Facebook, which it's not a question, it's a comment. I'm just going to put it on the screen because people on YouTube and LinkedIn can't see it. But I think it's a great insights from Beverly. And while I'm doing that, my question for Jim is, Jim, have you got any more examples perhaps to share?
Yeah, I mean, if I'll read Beverly's comment in a minute, but yeah, I mean, as I said, my sort of main interest is in restaurants, pubs, bars, hotels to a certain extent. One of my interests is cooking and food and that kind of thing. So restaurants are sort of something I enjoy working with. at the moment in the UK, certainly they're facing huge uncertainty. They went through a rough time during the pandemic. They got fair amount of sort of government assistance during that period, but for a lot of the time they were either closed or restricted in the way they could operate. So they're now faced with a situation with food inflation is running at around about 10%. Gas and electricity are going up hugely, and I've seen reports of some restaurants where their fuel bills are going up by 300%. Um, uh, which makes a huge. If your overheads go up by that kind of amount, it makes a huge difference. And of course, inflation is also affecting the customers, so they've got reduced spending power and nervousness among customers. And we've got rumours of government help. I mean, I don't know how much you know about UK politics, but we're currently in a situation where Boris Johnson, our Prime Minister, is on the way out, and they're voting, I think, next week on who is going to replace him. And they are both talking about different types of help that might be available. Incidentally, if you're in the UK, not many people seem to be aware of this, but Liz Truss, who seems to be the favourite at the moment, she is actually a qualified chartered management accountant, which makes some of the pronouncements she's come out with really quite surprising, because they don't seem to make a great deal of sense. But you would have thought she understood the numbers behind businesses. Anyway, so businesses, restaurants particularly, are facing a huge amount of uncertainty. There's been predictions that 70% of the UK pubs may go out of business over the course of the winter. One of the things we can do with modern software products is we can model quickly different scenarios. And the way I would start with one of these, with a business in this kind of situation, is start off by saying, what happens if we do nothing different? If we just accept what the world throws at us, we accept the fact that our food costs are going up, our utility bills are going up, and customers may be spending less. What does that look like? And that gives you a starting point to then compare all the other different scenarios. So having done, what I think you might call a sort of do nothing different forecast, and you might need to do a couple of different versions of that based on different assumptions about government help. I mean, one of the things that's in the air is there possibly might be a reduction in the sales tax, which mean customers can buy more if in the UK the way we present prices to customers is including the sales tax. So if a meal costs 60 quid including sales tax, if the sales tax goes down, the restaurant will continue to show it at £60 including sales tax, but they'll actually make more money from it. So there's talk of that may happen. There might be measures to help with utility costs. So we might need to do a couple of different versions with those assumptions. Then what we can start to do is look at options for business decisions. And I think the important thing to do here is to get the client talking about what they might do. And at this stage, not prejudge any of the options. So sort of brainstorming exercise, what are the different possibilities? And then you can start to put together either summary forecasts or fully detailed forecasts for all those different options. And what I would want to do is encourage the client not to make a decision about what they're going to do until we've actually done, at the very least, a summary forecast and maybe a full forecast as well. If you're not careful, you get a situation where you sat in a room with the client, and maybe 3 or 4 people sat around the table. They will come up with ideas, and the temptation is for them to prejudge which one they want to look at, and people will promote their favourite. It's much better to actually model all of them, and then you can you can enable the client to make decisions once they've got all the facts there, and they can decide which ones they want to do. Um, so what the client gets is a series of forecasts with different assumptions. They can assess the assumptions, see how sensitive the results are to changes in those assumptions, and then make sensible decisions. So that's the way I would approach talking to a restaurant owner. And then as the government assistance, if any, pans out, and we know what that's likely to be, you can then refine it um, uh, and and move the thing forward.
Absolutely. Jim, I'm conscious that time's marching on.
Oh, it
There's,
is.
I got two questions that I do want to ask you. One's about number storytelling, and also
Yep.
we did hint that we'd talk about forecasting software and so on. So I want to cover those two things. Before I do, very quickly, I noticed an interesting comment from, I don't know who their name is, it just says the Profit Playbook, but they said forecasting could be a standalone practice offering, quite profitable as a high ticket offering. And I absolutely agree with that. Forecasting, I think, is extremely valuable and should be priced as a high ticket item. And another thing that another thought that occurred to me as well is, I think that forecasting is so powerful, particularly for certain types of businesses or certain situations. I would be inclined, if it were me running an accounting firm, I would bundle it in and I might make it compulsory that people have that. So, for example, I think everybody starting a brand new business startups, they should have a forecast. Because how can you start a brand new business with no idea of what might happen?
Yep.
Usually, business startups know nothing about impacts on costs and things. So, why not just make it compulsory? If you want to work with us, then we're experts in business startups and you must buy this package because otherwise you'll fail.
Yeah, yeah. One of the things I think is important, we haven't got time to go into in detail, is keeping the forecast alive by bringing in actuals each month and looking at what's going on and uh, yeah, really using it to help you drive the business day to day.
Yeah. Okay, Jim, let's, we have got a question from Lisa to deal with as well now. We have 3 minutes. So before we get into some software, talk a little bit about what is number storytelling, how can people get in touch with you and find out
Right.
more?
Okay. I mean, I think I said earlier on that my sort of real passion is how we understand, unpack the story behind the numbers. Um, so, we prepare accounts, we look at the ratios and what have you. There's a story behind that we need to unpack, and we need to communicate it to our clients. So there is really sort of two. I started the number storytelling academy, I think November last year, and there's really sort of two elements to it. The first is how we uncover the story behind the numbers, and the second is how we communicate those numbers to our clients, help them to make sort of better and faster decisions. So those are the two things that I teach in the Number Storytelling Academy. And we have a live session once a month. There are tools and various other things that I provide as well. And there are some exciting things on the way. There is it's not I'm not currently opening it for new members. As a particular reason for that, in that I've got to have cataract surgery sometime in the next few weeks, and I don't want to do is invite a lot of people or any people to join now, and then sort of be out of circulation as my eyes recover over a period of that. So the plan is to do a launch event in November, to give people the opportunity to join then. I think there is a link to my website which gives you more details. If you're interested, then there is a place there you can giving your name, your email address, and I will send you a reminder when we're about to relaunch.
Yeah, absolutely, Jim. So let me just, Sarah, I think is going to put the link into the comments. So look out for a link, and that will take you to a place that looks like this. And so if you just go to here, this is Jim's website. You can find out more information, and then just click on the Find Out More button, and then connect with Jim, and he'll let you know when he's next letting people into the Number Storytelling Academy. And I can see that Sarah has put the link now in the various comments. So go and check out what Jim does. I think we might overrun a little bit. We normally finishes exactly on the
I've not
hour.
a lot to say about software, so I can probably keep it to 2 minutes. So.
Yeah. So, well, Jim, so tell me, how would you recommend people go about selecting software for forecasting?
Okay, right. There are quite a lot of software packages about. I'm not an expert on all of them. I certainly haven't tested them all. I think the ones that. So let me give you sort of indication of what I think the important things are that you need. The first thing is you need three-way forecasting. So it needs to forecast profit, cash, and balance sheet. And if you don't do that, there is a danger that you just end up with, the cash figure ends up with a balancing figure. So if a mistake is made, it's really difficult to spot if that happens. And three-way forecasting gives you the complete picture. You need the ability to be able to import actual figures, and most of the software packages out there, as far as I know, do that. I think you need the ability to build the forecasts from drivers, not just financial drivers. So volumes, conversion rates, how many cups of coffee a barista can serve, that kind of thing. You need clear reporting and clear charts so that clients are capable of understanding them. The final one that I would watch out for, particularly if you're in the UK or elsewhere in the EU, is the correct treatment of sales tax and VAT. There are a couple of products that are really good, but they don't deal with VAT in a terribly helpful way. I mean, the one that I particularly like is Castaway. It's called Castaway Forecasting. The big disadvantage with it is that it's not cloud-based, so you have to, get it and install it on your own computer. Live Plan is really good, and I really like the way that the live plan method that Kathy Gregory talks about. It's a couple of years since I looked at it, and the only reason I don't use it is that I don't think it treats VAT particularly well. There's a workaround, but I'm not a great fan of it. There are lots of other products around. There are also some that are great for the short-term forecasting, and they work by taking figures from QuickBooks or Xero and then working out when invoices are going to get turned into cash. I can't say that I've used any of them, but I know there are accountants and bookkeepers who are big fans of particular ones. So yeah, those are the sort of 5 criteria I would use when choosing a software package.
Thanks, Jim. That's really useful.
You could use Excel, and in the past, it's what I would have done. I really wouldn't if I could possibly avoid it. It's hard work to keep them up to date. If it doesn't balance, it's a nightmare trying to find the difference.
Yep. And I mentioned earlier that you can grab a free ticket to Value 2022 in October, and we will have some of the software companies that do forecasting will be there, so you can go and visit them on their virtual booths. So make sure you did click on the link that's in the comments to grab your ticket for Value 2022. I know that Gordon asked a question earlier about Pricing Academy members, don't use that link because there's a special link for if you're in the Value Pricing Academy or the Bookkeepers Pricing Academy. We do have, we should really finish now because we are over time, but I'm conscious we have 2 questions. So Jim, have you got time to answer 2 quick
I
questions?
certainly have, yeah. Yeah.
Great. So the 2 questions we've got is, the first one's from Lisa, who does say that number storytelling is fabulous. So I guess you know Lisa.
I
I'm
do,
going to guess.
yes.
So she says, as a bookkeeper, how would I get into this field? Any thoughts?
Yeah, I think it's probably a much more natural fit for accountants.
My thoughts are is that there's no reason why bookkeepers can't get into this because there's plenty of software tools to do it.
Yep.
And I think it's just making sure you've got the skills, know how to build a forecast, and also that all the things that Jim's talked about in the last hour, like making sure that when you ask the client what their sales are likely to be, you sanity check them, you make sure that they can achieve those sales, that you think about the limitations, the things like the number of tables and so on, all the things that Jim's talked about. I don't see a reason why a bookkeeper can't launch a forecasting service in just the same way that accountant firm can.
Yeah. I mean, we have. I mean, as you know, Lynn is in the Number Storytelling Academy, and we have done a session on more detailed session than this one on forecasting. And yeah, I mean, maybe I ought to do a sort of detailed one on how to actually use one of the software packages, and maybe do some videos for that. It's not on my list of plans at the moment, but it's it's certainly worth thinking about if that would be valuable.
Okay, great. Final question then before we wrap up from Jennifer. If you've got a couple of quick thoughts for us, she says, "What happens if the business doesn't have a good handle on their unit costs or prices? Do you delay building the forecast to help them understand their costs first, things like unit costs and fixed pricing and fixed costs and so on?" Any thoughts on that, Jim?
Hello, Jennifer. I think we've spoken before, haven't we? Yeah. I think it depends very much what sort of a business it is, and some businesses you can start by helping them to, if they don't have a good handle on those kind of things, you can start by helping them to do that. So, I mean, if if I was talking to a restaurant owner who's not particularly good with that kind of thing, I would start to talk to them about how many tables you've got, how many covers can you handle, what are your what's your sales pattern like for different days of the week and different sessions. And you may well find that the information is there, and particularly with if it's a retail business with modern tills, they will throw out all sorts of interesting information which the client information may be there, but the client has not has not yet found a use for it. I think for other businesses you may need to get them to actually do a bit of work first in looking at their cost structure. Hope that helps.
Yeah, I think it touched on a good question, Jennifer. I think it touched on an issue that a lot of businesses, small businesses, are just they don't understand some basic stuff about numbers and so on, like as you say, unit costs and so on. And so one of the things that you could do when you're offering a forecasting service, and many of you will know I talk about things like menu pricing and so on. One of the things that you could do and build into your forecasting is some education, some training, some teaching the client how to understand some of the numbers and how to get numbers out of their system and so on. And then what you could then do is you could as you create your bronze, silver, gold offering of a forecasting service, you could build education, training, and so on into one of the options. Or for those of you using the effective pricing software, you might offer that as preferences or upsells. And so all these things that we can do to add value, not just doing the forecast, the number crunching, but just the education, the training. We can create huge amounts of value there, and we should build that into our pricing system, into our packages, our offerings. Jim, you've been great. We've gone over the hour, but I think it's been really useful. Thank you so much for giving your time. And I do encourage encourage everyone to check out what Jim does with the Number Storytelling Academy. So the link was in the comments. Go and find that link, click on it, go and have an explore of his webpage, click on the Find Out More button, and you can find out more about what Jim does. So on that note, thanks so much for coming along, Jim. I know we'll speak again soon. I hope the operation goes well and is a big success with the eyes.
Thank you very much.
And let me know when you've got the date for your launch in November, and I'll share that date with people.
Thank you.
Thank you, Jim. Okay, and thank you to everybody who's come along. As Lisa said, if you found it valuable, please click the thumbs up or the like or whatever. That would be much appreciated. My next live stream is on September the 29th, so put that in your calendar. As usual, I'm going to play out with some music. Gives me a chance to read some of the comments. Enjoy the rest of your day, the rest of the week. See you soon. Bye for now.
I wasted all my time, I wasted all my nights, I wasted it on someone who's indifferent. He didn't love me right, he told me I was blind, but I never really wanted to listen.